Stocks take a breather, and I'm thinking they're going to be filling the gap before the next move up. Dollar rally shows no sign of slowing. This is important. I'll explain why as euro, pound, and yen slides. Gold looks somewhat fragile amid this dollar strength, so we will look at more forex than anything else this video. This and more in today's edition of MasterChartsTrading.com. Market recap for Friday, October 31st, 2025. Happy Halloween, everyone. If you're a subscriber, stay tuned. We'll be covering market breadth, copper, natural gas, and some of the other ETFs in the members only section, some of the large cap stocks, as well as some speculative securities, including some of the new names such as 10x Genomics, some of the psychedelic firms like Bright Minds Biosciences, as well as a new addition, Dollar General. So stay tuned. Let's get to it. So the week itself was not anything like super duper or anything of that nature. The only thing I can say about this week's weekly candlestick is the way it looks kind of like a shooting star because it gapped up from the previous week. Zoom in even more. So this is a previous week right there, the green candle, and we gapped up, went to all-time record highs and came down. So it does definitely have this shooting star candlestick look with a large tail at the top, smallish tail at the bottom, red body, and it is above the previous candlestick, so it gapped up. So on the weekly chart, does not look that great, and I mean, it does look a bit toppy. Basically, that's what I'm trying to explain. And if you're a subscriber, I will also go over some of the market breadth parameters, which are getting frosty, especially the put-to-call ratio. Looking more on granular, more on the daily charts. So the previous one was the weekly chart. This is a daily chart. This is last Friday, the 24th of October, and we see the gap up onto Monday the 27th. We kind of traded around. Finally, we closed today, like where I'm pointing. This gap still remains only partially filled. There is just a little bit of space, like there's a tail out of the bottom from today's price action, tail out of the top from Friday's price action, the 24th of October. There's still a tiny little gap remains right there. The bigger gap is right there where I'm hovering between 23rd and 24th of October. I kind of circled it as well. Oh, there it is. Still open. So I think it's very likely that we will see price come down, and most likely we'll see a move down for stocks in the next few days. Nothing terribly worrisome yet, I don't think, but you know, definitely we are overextended, so a pullback is a normal sort of thing, so I'm not excluding a more sizable pullback, but you know, for now we're just looking at the smallish incremental moves down to fill the gaps. And so the remainder of today's video will be mostly have to do with the dollar, foreign currencies, gold, and gold miners. So stay tuned. Basically, stocks, like I said, not really much we could say about them at this point, except for possibility of a corrective action. Okay, this is dollar currency index, ticker symbol DXY on TradingView.com. So I'm going to zoom into this price action. So this is a 3+ year low that occurred on Wednesday, the 17th of September. And I was already wondering if this could be it for the move. So notice we moved up towards this yellow support resistance line. Again, you can find out more about it by going in the description of the video. Pulled back, broke out above it, but then again pulled back around 15th of October. And actually I put in those two arrows here because the the dollar currency index was pretty much evenly poised for either a rally or to retest new lows. My feeling was that the rally will keep going, and I was pretty much correct. So we saw a breakout again above the this yellow support resistance line on the 20th of October, pull back towards it, retest of that breakout, and now a rally. So 3 days of non-stop. You can see a very nice looking green candlestick. Important thing is we just broke above this October 9 highs, and now we are approaching these highs, which are from August. So these highs, I think, are quite important, and I think if we break out above this October highs, it's almost a guarantee that we will touch this red support resistance line, which was not that far off, just slightly higher. So at that point, we'll need to decide, is this a true, honest to goodness turnaround for dollar, whereas now dollar will continue to appreciate significantly, possibly going towards this blue support resistance line? Or is this again an opportunity to sell short, as it was a case back here in April of this year? Now, again, this is my hunch, and I have a suspicion that we are done with depreciation of the dollar, and I think we will continue higher from here. So when we get to gold, this would be important. So for now, just look at this chart in isolation, and I think, again, the dollar rally is not done, and I will explain why with the next few slides, few charts. So we're currently looking at euro versus US dollar. Euro is a large weighting in the dollar currency index. So you can sort of see that it is almost like an inverse of the way euro looks. So there's the high on 17th of September. There's the low on 17th of September. So it's basically, dollar currency index is like 50% euro. So euro, again, plays a huge part. And notice that today is October 31st, we broke below this mid-October lows for euro. The opposite is true for the dollar currency index. Today we broke above this mid-October highs for the dollar. So again, we're approaching now this July or early August lows, and if I'm correct, then euro most likely will not hold here and continue down towards at least the blue support resistance line. So again, at that point, we will need to make a decision of whether or not this is a temporary weakness for euro, and we should be buying it, similar to what we did here back in March of this year, or we should be doing nothing and waiting for it to break down further towards this red support resistance line. Again, my suspicion is that we are done, and I think we will continue lower, and then once we get to gold, we will discuss it in more detail. Here's British pound. British pound is already down towards the blue support resistance line, so euro is still kind of, hanging out here by the green support resistance line, but notice the British pound has, already came down towards this blue support resistance line. So at this point, we basically need to make a guess. Do we want to be buying here, or do we want to be doing nothing? Again, I am reluctant to sell the dollar right now, just because of the way the price action has been. I mean, I cannot exclude that British pound will kind of hold here, maybe make a attempt at bounce, but I'm, as a quote unquote, I'm just not feeling it. I think we will see further depreciation of the British pound and appreciation of the US dollar. Finally, I wanted to show US dollar versus Japanese yen, and US dollar versus Japanese yen is an outright bull market. In other words, US dollar is ascending and appreciating. You can see US dollar divided by Japanese yen. So notice that the US dollar versus Japanese yen actually bottomed around April and then pretty much continued moving higher. And the breakout in favor of US dollar occurred right there on the 7th of October when it closed above the blue line. So this one is pretty clearly in favor of dollar, whereas the British pound and the euro, there is a possibility they're just sort of pulling back before a next leg up will begin. Japanese yen is unequivocally in favor of US dollar, and it's in a bull market now. So in other words, Japanese yen are in a downtrend. So Japanese yen now in a downtrend. You can see the close below the red line. So what does it all mean? As I'm trying to show, so dollar most likely has bottomed, even though this was a 3-year high. We're breaking out. Looks like dollar is poised to continue its rally. So since we do trade gold, we need to know what's going on with gold. Why XAU gold divided by US dollar. So if the bottom part of this equation, US dollar, I just showed you, is getting bigger, stronger, it will pull this currency pair lower. This is exactly what's happening, because notice that this currency pair, the dollar, gold spot divided by US dollar or gold futures, peaked right here in the 21st of October, and has been moving lower, whereas DXY has been doing the opposite. So what am I predicting? What am I thinking about the gold? So I think it's pretty high probability that we will continue coming down. Gold will continue coming down towards this blue support resistance line, which is currently around 3,700 or so. So most likely we will see a further pullback for gold, at the very least in the next few weeks to months. We don't know, obviously, if this run is over for gold. I mean, it was a tremendous run, truly enormous. We have been trading it. We've been trading it using gold miners, but previous latest opportunity was in February of 2024, so over a year ago, a year and a half ago actually. So as I'm trying to point out again, most likely because dollar is appreciating, gold will be depreciating, at least in the next few weeks. And I think the very good logical target is somewhere around 3,700. So let's again wait and see where we get. For now, I think, let's also look at gold miners. So gold miners obviously are much more volatile. We saw a record high right there on 16th of October, and so far we actually came down already a significant amount, 20%. I mean, they were extremely overextended, obviously, but now we're finally coming down towards Earth. So again, I think the pullback for gold will most likely, almost guaranteed, will translate into pullback for gold miners. So let's again wait and see. I think we are definitely in this weird transition period, whereas we cannot 100% say if the dollar has turned around, but at the very least we can say for sure it has turned around against US dollar versus Japanese yen. And the other two, the British pound and the euro, are quite likely to follow suit. Head over to MasterChartsTrading.com, click on sign up one of the products. Again, I have 2 products, one trading indicator, so you can trade pretty much anything using my lines, this green, blue, red, and yellow lines. They're available for TradingView.com. So that's what trading indicators are. Again, for TradingView.com, you can have a free TradingView account. You just need to sign up for my trading indicators on MasterCharts Trading. The newsletter, so this is hopefully will be a major upgrade pretty soon, whereas you will be able to pick stocks that you will be getting alerts about. You can also most likely will be able to get alerts about non-US stocks. So what I would urge you to do if you're sitting on the sidelines and not sure if you want to sign up for the newsletter or for the indicators with newsletter, so the bundle, I would urge you to sign up now, because most likely we will grandfather in the basic new level of newsletter service, but the prices most likely will be going up. So I would again encourage you to sign up now while the prices are still low. And all of my subscriptions have free 7-day trial. You can sign up, cancel anytime. Best deal, of course, is to get the yearly subscription for both indicators and newsletters, but even the monthly subscription is also quite good and a good deal. That's it for this week's recap. Let me know if you have any questions. Please, again, don't forget to hit the like button. This is what's important. Make a comment in the section. Even put a thumbs up in the section, or heart in the comment section, or heart, or any kind of comments. And this will tell the YouTube algorithm that this video is important and more people will see it. Thank you for watching, and have another great trading week. Bye-bye.